Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. It is Tuesday, and well, the market is I don't know. It's it's a tough one to figure out. We were up a little bit today. We're snapped back. We're kind of going sideways. So it's kind of the market where it's just difficult to put words to it. Want to start out with the stocks that I have long, and this might be of interest to you. Let's put it up here and go to the long. There we go. All right. Let's see if I can get it correct. These are the stocks that I currently am holding long. First one, doing quite well. ADHR. Very interesting stock, a test equipment company in the semiconductor space, and definitely looking pretty good. The semiconductor space has been uh, it's been a very good space, and it definitely moved up today, backed off a little bit in the after hours, backed off on a little bit in the after hours. But I want to show you this chart because we are in a confirmed uptrend, which is kind of amazing when you think about it. We are in a confirmed uptrend, and oops, let's see if we can get that back up on the screen. There we go. We are in a confirmed uptrend, and it's looking pretty good. We were up 3 days in a row. Now I expect a pullback on this one, probably tomorrow. I'm going to put in a very tight stop on it, but this one is doing fairly well. I mean, it's making the move. It's a 99 relative strength. I want to show you the technicals on this. Very, very extended though. It's 20. It's 29% above its 25 day. It's it's 20. It's 29% above the 21-day average. So do expect a pullback on this one. They had some really, really good numbers, and it does look like, they're making a nice move here. I wanna show you the kind of the results that came in, and they were very good on this one. AEHR is the symbol. You don't probably wanna buy this one right now because it is so far extended. I did buy this one, took profits on it, and then I re-entered it, but I'm gonna definitely, probably put a very tight stop in on this one, tonight, just because of how far it's extended above. But, interestingly enough, this one, it just seems to be it's based in Fremont, California, and it's wafer test and burn in. And I've been looking. It looks like the first sector to turn upwards in this market has been the semiconductor. So I have several. I have several plays in the semiconductor space besides this one as well. So I just wanted to basically bring this to your attention, so that you could definitely see it. Um, the the next one that I want to show you here that I am long on is Cadence Design Systems, and this one seems to be working very well as well. So CNDS is the symbol for this one, and Cadence Design. Oh, there we go. Hopefully, we'll get. There we go. So let's see if we can get Cadence up here, the chart for Cadence. Hold on one sec. See if I can go back over to for some reason, it's just not letting me move. Yeah. Okay, there we go. Oh, that's interesting. Okay, so this is showing. I did not realize that. Very interesting. Okay, so hopefully we can go to Cadence. CNDS is the symbol for this one. Cadence Design. CDNS, excuse me. CDNS. Now, this is an interesting company in that it provides a lot of the software for the, oops, let's see if we can move it over here. I want to show you, oh, this is interesting. Okay, great. This is providing a lot of, this provides the software that actually makes the chips. Now, interestingly enough, this was an inside day today. I did come in here, and we did have a very nice look at this one. We did, we're up after hours. It's pulled back. I think this is going to go higher. This is definitely moving higher, and it's above the 200-day moving average. So this is definitely something that you want to look at. Now, here's one you can buy at this level. So I wouldn't buy the first one, AEHR. Just I wouldn't buy it. It was too far extended. But this one's almost perfectly lined up. It's not extended at all. If you look at the 21-day line, it's 1.42% above that at 162.03. So we're very, very close. We can, this is definitely in the buy range. So this one you definitely could probably start to put in a position on. It's got earnings in about 34 days, but overall it's looking pretty good. It's looking pretty good. We did it. We have moved from a downward trend to an upward trend. So it's still is, I don't think it's time to put in puts right now. I think it's time to basically, just kind of come in as low as we can in these because I mean with the smallest positions that we can do because I do think that at least currently, at least for the time being, we're starting to see a movement. We're starting to see a movement upward in the upward. Also, the next one I want to show you is Lattice Semiconductor. This one's up after hours too. I did buy this one. I've held this one for 2 days. I definitely think I got it correct on this one. Let's see if we can get that up there. There we go. Okay, so this one, Lattice Semiconductor, um, is also looking pretty good. Let's go over to the chart and let's go for a full screen here. There we go. All right, this is Lattice, also in the semiconductor space. This is starting to show this in this upward trend, and this upward trend just started really basically on Monday. We're starting to see some movement of capital into the semiconductor space. That's why I have three of the semiconductors. It's up after hours. Relative strength on this is 96, so it's very, very strong. Not all the semiconductors are created equal. This one just happens to be, moving up very nicely up the 50-day moving average. I want to check the technicals here. We're almost extended here. We're not quite, but if we look at that 21-day line, we're right at about 5% above that. You always, in this type of market, it's critical that you buy as close to that 21-day exponential line as you can in an uptrend. So we can still probably nibble a little bit at LSCC. That is Lattice Semiconductor, and it did have some pretty good numbers. It did have some pretty good numbers. So I want to look at that just a second. So we'll go over here to the weekly chart to take a look at the numbers for Lattice. And there we go. Okay, there we go. Lattice Semi. Let's go back here. And this is these are the numbers for Lattice. Very nice movement here. We did have, we were last quarter we were up in sales 31%, 71% in terms of profit, and we have a rising number of funds that are moving into Lattice Semiconductor. 74% of the people that hold Lattice are funds, so not that many individual investors, but strong cash flow. And so the sort of the insert money is looking at this. This is based in Hillsboro, Oregon, very, very close, almost co-located with the Intel factory up there. But they design programmable logic chips. These are very, very important in terms of industrial applications. And there has been a chip shortage with some of the conflict in Asia, especially from TSMC, which is based, of course, in Taipei, and is one of the largest producers. So we do expect that we're going to see some movement of capital into some of these other companies, these smaller companies that haven't in the past had as much it didn't have as much of the market. But I think that's going to change. I think we're going to see a movement back to many of the we're going to see a movement back to many of the the semiconductor companies in the U.S. just for various political reasons. Also, I wanted to show you just real quickly a my shorts. This is these are the companies that I am currently shorting. It's one I did open a short today, and um, that was on Lululemon, which is a obviously athletic apparel company based, and of course, in British Columbia, in Vancouver. They've had a very good record up until now, but I do think that the retail sector is starting to break down somewhat, and I think we're going to see some weakness in the retail sector. That's one of the reasons I did short this one today. There was a story out that Lululemon is going to get margin compression. They've had some incredible margins on their products. They're starting to get some competition from a lot of different sources. So with this margin compression, uh, yesterday on Monday, it did fall off significantly. I mean, it basically was a gap down on the stock, but today it moved up, and I do expect that it's going to come up very close to that 50-day line and then probably reverse. I may have shorted it too early. We're currently on the 21-day line. We're 4.2% below the 21-day line, so we're definitely in range. I definitely think it's going to come up to the 21-day line and then possibly move lower. But I did put in a short, just a very small one. If we get some progress tomorrow, I may increase my exposure to the shorts on that one. So kind of interesting when it comes to shorting. So basically, right now I'm long in three stocks: Cadence Design, uh, uh, Lattice Semiconductor, and AHER Test Systems, which is of course in the semiconductor space. And then I'm short. I'm short. I'm short Lululemon. So, without further ado, let's get to some of the questions. Thank you for holding there. Appreciate it. Thanks for looking. Let's look at the spider. Thanks, Sarah, for always enjoy your questions. Let's see if there's any divergence between the spider and the Qs. Now, for all you don't know out there, the QQQ is the um, is the symbol of the ETF, exchange traded funds, that covers the NASDAQ 100. Now, it typically is tech stocks in this one. Of course, many of the large tech stocks are in this. Microsoft, Apple, the normal suspects are in this one. Um, and so this one has been underperforming the other areas of the market. Now, we did get a little bit of a bounce. We came up it looks like it's right at the 21-day line. Let's take a look. This is that green line. It's base. Yes, right on the 21-day line. And it does look like it's pulling back a little bit after ours, not very much. Now, here's the thing. Here's where we can be fooled. We had a movement up today, but notice on weaker volume. Notice how the volume is coming down. So even though we're getting higher prices on even though we're getting higher prices on the QQQs, we're still coming down in terms of volume. So I do expect this one possibly to run out of gas and probably reverse lower tomorrow. That's my guess based on this chart. Now, of course, you can't tell. You can't tell everything. This is the 5-minute chart on the QQQ. You notice it came down and then it went sideways and then it started making its movement up. But basically, it's down today. You can see it basically from about there. So, lot of volume in the very end of the day. Now, typically that is those are day traders that are closing out their positions, and so they won't hold overnight. But that's kind of the deal there. All right, let's look at the spider and the Qs. Let's go back to the spider here. Now the spider is the ETF that covers the S&P 500, weighted pretty much exactly as it stand, pretty much um, exactly as it is. So this one also is down. What I'd like to do here is compare these both of these charts, and that's the Qs. Oops. See if I can get back to that chart. Hold on. All right. So with the QQQ, share that out. What I'm doing is I'm pulling up the line chart for the. I'm pulling. Well, I'm trying to, anyways. Yeah. Oops. I have a battery issue with my machine, and so it's not letting me share. Hopefully, now it will let me share. I'm going to have another machine tomorrow, so hopefully we'll hopefully we'll be able to talk about that. It's giving me this is giving me fits there. Ah, sorry about this. It's just very frustrating because it's not giving me the ability to drag and drop screens. There we go. There. Okay, so hopefully we'll be able to see this screen. Oh, well, I may not be able to show it to you. All right. Well, let's see if I can bring it up. Let's give it a new window. There we go. All right. Now we should work. Sorry about that. There we go. Okay. There we go. So let's look at the spider. And all right, hopefully it'll let me move over. There we go. So now I should be able to hopefully. There we go. Okay, so now we're back. Now I have access to the spider. Again, the problem here with the spider is, we made this move, but we're now below not only the 200-day moving average, but we're below the 50-day, 21-day, and 10-day. So it has rallied here a little bit, but I definitely think this is going to cut off. So expect tomorrow another probably weekday, but I definitely think it may be turning the corner here. But let's take a look at this, compare it against, uh, well, maybe not. Okay. Let's compare this against the spider and let's put the Nasdaq in there as well. Okay. There. So hopefully we can show you. Yeah, hopefully by tomorrow I will have this fixed. This is an issue with my battery in my laptop. There we go. All right. So this is the comparison of the spider and the Nasdaq Composite. It's not the QQQ, but it's very similar to it. As you can see, the spider is still outperforming. They're both in an upward trend, but the spider is outperforming the Nasdaq. This is what's happening here. Is there's still a movement of capital away from there's still a movement of capital out of some of the tech issues. Now, we started to see some capital move back in a little bit, and that's primarily been in the semiconductor sector. That's part of the reason I've been in the semiconductor sector. Other than that, most of the action is basically in the S&P 500. So that's kind of the long and short of it. All right, let's take a question from TikTok. Jim, uh, let's see. Let's take a look here. Okay, for everybody. Okay. What's up, JK? What's up, JK? Okay. Did you ever did you ever live in West Bay? Well, I did live in the Bay Area at one time. Right. Look at multiple EVs to EBITDA. Right now the EV market with this is CPI. What is matter? Okay, the CPI, Consumer Price Index, is important. Why? Because the higher the CPA goes, the more inflation, and of course, everybody is having to substitute products. What's really going on here is that as prices go up, discretionary income goes down because income doesn't go up with prices. So what's happening is with the higher CPI, you're seeing people basically just buy the necessities. This is why retail is so weak. This is one of the reasons I shorted Lululemon because it's primarily a luxury item, and luxury items typically don't do that well in periods of high inflation. So that's kind of what's going on here. That's kind of what's going on here. Mark is asking, did I sell UPRO? Absolutely, I did. What happened to me on UPRO is I had a stop at 33.95, I believe it was. Let's see if I can bring that UPRO up and get that. Let's go to. I did, and I got stopped out of it. I did get stopped out of it. Now, usually, what I do is there is a um, when when there's a change in the character of the market, which there was, um, that's when I look to go to I look to go into something like the God is it's just not letting me do it today. Let's go back. Okay, there we go. Okay, so maybe we can set it. There we go. Um, I did sell I did sell my position in the UPRO as it and then of course it went down and then boom, it just moved right back up. So again, very tough market to trade. I had stops in on this one, and that's the reason why. That's the reason why I did sell it. I'll show you where I sold it. Basically, what happened is my stop was right here, basically right here, as you can see, a little bit above 30 34. And what happened was, and the reason I set it there, of course, is because, and then it pulled down, and then I sold it, and then of course, during the day it went up. I have these I have these stops very tight, and the reason that I do is because this is such a volatile market. I just don't want to take much of a loss there. So that's what I did, and basically it was a wash. Not really, not really. Oops. Let's go back to the. There we go. All right. So I'm going to go back here to see if I can get a. All right. There we go. So let's go over here to. This is a question. Gotta look at it. Okay, this is the next resistance for the QQQ. Let's see. Let's look at it here. If I could bring that up. Yeah, there we go. Okay, so let's look to see where the next resistance is. I believe the next resistance for the Qs is basically right here at the 50-day moving average. So my guess on this one, and it is a guess, would be that we would be looking at resistance right about here at the 50-day line, 276.95. That's where I'm seeing it. We're just below that. So I definitely think that, we could go sideways or up a little bit tomorrow. But I do see some resistance at that level. 276.95. That's kind of where I see it. That's kind of where I see the resistance. Above that, we're pretty good clear sailing. So if it can come up and it can move past the 50-day line at 276.95 on the Qs, then I think it's probably going to go higher. But it doesn't look like, I mean, it looks like it was a weak attempt today. It was up, but only 0.85%, 2.29 in terms of dollars, and very weak in terms of the volume. So that probably indicates that the 50-day line is going to be where it's going to be at. So okay, what do you think about a CRM short at 148? That's a good question because CRM, that's Salesforce.com, has been a extremely weak stock. So it's been, oops, it's been an extremely weak stock. So let's see if we can see it. There we go. Okay. I'm going to go over here and just reset it to CRM. Of course, this is Salesforce.com, and it is part of the Dow, which I'm amazed at because I don't think it's that significant a company relative to some other ones, but it is part of the Dow. So amazingly, amazingly, this one is part of the Dow. So where do I see a shorting prospect here? Well, if we look at it, let's look at the weekly chart here to kind of get an idea. We've been in this downward trend, of course, right? And we've been in this downward trend, and it looks like that hasn't abated. So you're right to look at it for a short. If we were to draw a reversal line here, I think you could make a very good case that it could be shorted basically just at just right above the 50-day line. So let's look at I'm sorry, at the just right above the 40-week line. So here's the thing. I would wait on this one. Now, I know this is I don't know if it's going to move up this high, but I would try to wait until about 161 to short it. Why? Because I do believe now this 40-week line will come down a little bit, but I think it's too early to short it. I think it still has a little bit ways to move. So between here and about 155 is going to be where I do it. So here's what I would do. I would put a limit order on a limit order to short it at about 155. Now, here's the problem. I wouldn't short it right now because the market has changed to a confirmed uptrend. If we move back to a uptrend under pressure or a downtrend, then I think you should short it. So right now, I would put it on a watch list because the setup just isn't as good as I'd like to see it, and it's very tough shorting in essentially what is an uptrend. So not the easiest thing. Now, and you're probably going to say to me, "Well, Jim, why did you short Lululemon?" Why? Because the stock is starting to break down. I've been watching it for a long time, and I do believe it's going to uh, go lower. So that's my opinion. I think we can buy this one and have a good sleep from Lisa. CECO. Don't know what that is. Let's see if I can take a look at CECO. Okay, come on. There we go. CECO. I don't know this stock offhand. Yeah, look at that. Nice. Oh, it's environmental. Okay, yeah, for some reason, and I don't know quite why this is, but the environmental stocks as of late have been doing quite well. Now, this does many times show a move. Yeah, there we go. Okay, so let's see if we can move it over a little bit more. There we go. All right, yeah, I can see why you're interested in this one. It definitely made this move up. I don't know. I'm a little bit leery buying it. That's this far, and of course, say, well, it gapped up. I'm a little bit leery about buying this one's extended, so I just think that you would have to be. I don't think this is a good place to buy it. I think it's extended. I think you just got to let this one go. I think you just got to let this one go. All right, very good question. What is CanSlim? Well, CanSlim is a system of looking at stock movements, technical stock movements, invented by William O'Neill. And if you're interested in it, you can jump over to my website www.dallastradingfloor.com, and you can click on a link and see what the book is. Now, it's you don't have to buy it obviously off of my website. It's available on Amazon, but it's How to Make Money in Stocks: A Winning System, Good Times or Bad. And I definitely think it's worth you looking at this book because basically many of the top traders in the world use it. But let me kind of give you a look see on it. Let's see if I can do that. Um, I want to show you the. Yeah, there we go. So here we are. Let's kind of look at it. There we go. This is the book that I'm talking about right here. How to Make Money in Stocks: A Winning System, Good Times or Bad. So let me see if I can click on that. All right. So I don't know. Now, let's see if I can give you this one. There we go. Okay, so this is the um, this is the stuff. This is the book that I'm talking about here. This explains Can Slim, and here it is: How to Make Money in Stocks and Winning System, Good Times Now. I looked it up on Google here, put it up on the screen for everyone. But if you want more information on it, just go to my website www.dallastradingfloor, and you can click on that and take a look at it. And it just ships from Amazon, so it's pretty good thing to take a look at. Definitely take a look at that. Okay, let's see from Hans. Jim, how low can we go in this market? I don't think the market's bottomed yet. I really don't, Hans. I wish I could say it has. I think we're in a dead cat bounce right now. I think we're moving up, but I think basically the market is still going to go lower. There's just a lot of there's just a lot of capital that needs to move out of the market, and particularly in some of the tech issues. Now, I did move into the semiconductors because I think they're going to be the first area that's going to turn in the tech area. But there's still an awful lot of what they call overhead supply in everything. Tesla has it, Amazon has it, Microsoft has it. All the big ones have it. So I think we're going to see another I think another 20% down is what we're likely to see. I really appreciate that question though. That's a very good answer. What platform are you looking at? I actually use something called MarketSmith, which it's kind of a proprietary platform. And hopefully tomorrow, when I have my better computer, I have this one's having battery issues. It's an older Mac, and I've had it forever, so it's having a little bit trouble holding onto the screens. But the platform that I use is called MarketSmith, and it's very well worth it. And you can Google that and find out more about it. All right, GMAM. This I think is I've looked at this one a few times, Matt. Let's take a look. I think this is um, um, in the oops, let me get that over there. All right. GMAB. Okay, yeah, this is the one. Very interesting stock. Let's clip on over to the stock, and let's do an analyze it a little bit. Came down to the. This is why it's so important that you know these index lines, because as you can see, this is how it's programmatically traded. You come down here, and then it comes right down to that 50-day line. It looks like it's got support there. It looks like it's got support at the 21-day line. Now, when you're looking to buy This is almost exactly on the 21-day line. So this is a good bet if you're looking to buy it. This is called this is a secondary buy point. This is a pullback. So this would be a good place to enter this stock at the 21-day line. As you can see, it's very, very close to that. 43.21 is the line. It looks like it's going to reverse higher. So this is a very good suggestion, Matt. This is a very good suggestion that you're looking at here. Let me click on over to that. Okay, all right, let's go and share that screen again. Again, I'm having some problems with my batteries, so unfortunately that's causing this not to take some of my commands here. There we go. All right, so this is GMAB, and the question is, how are we looking at this stock? And when you're looking at a stock, one of the best places to buy it is when it reverses higher. And what's happened here, of course, is it's come down. It's gone to the 50-day moving average, and then it's gotten some support there. As you can see, it's up and down, up and down, up and down. Now, this green line here is the 21-day moving average. It looks like it's gotten support at that 21-day moving average. This is not a bad place to buy the stock. Now, there is one caveat here, and that is if you look at the RS line, it's moving downwards. It looks like it's starting to turn up, but it's actually weakening. It was stronger, and now it's weakening. So the question is, can you buy it at this level? Well, this isn't a bad place to buy it, but I would put the stop very, very tight. The stop what I would put would be about 41.82. That's where I would put the stop. So if this starts moving and you buy it here, 41.82, that's going to be your stop. Why? Because if it drops below that, then it's going to go further down. So my guess is that it's looking pretty good, but we want to buy it as close to the 21-day line as possible. Excellent checklist of 100%. This is a tough market to trade in because the rallies are so weak that even buying in even the correct entry sometimes is giving us fits and starts. But right now it's buyable at that 21-day line. 43.21 is the symbol is the line. So not a bad place to buy. Not a bad place to buy it. All right. Thank you. Your thoughts on Google and Amazon. Thank you for that very much. I had been shorting Amazon. When the market direction changed, I closed my short on Amazon. Why? Because there's going to be a little bit of a bounce here, but I do think the trend is downward for Amazon. So here's kind of what some of these have, as you can see, that I've been shorting it on the way down. This is kind of bunched up here. I need to blow this up a little bit, but we came down and then we came up to that 21-day line. We moved beyond that. And if we look at that, we came right up almost to the 50-day line. This is where I think it's likely to get resistance and move lower. So if I were to short this one, you only want us to short when it's an uptrend. And I do think that we may get at that tomorrow. Where you would want to short that is at 90.86. So here's the deal with Amazon. You want to put in a limit order on this one. And then I do think that we're probably likely to get a reversal. Here's why. If you'll notice, it came up once before to that 50-day line. It's going to touch it for the second time. This is called a test. And then if you look here before it was at the 200-day line. So here's what's happening. The stock is weakening. And the reason that you do is because this black line, which is the 200-day moving average, you notice how that was the resistance before. Then after that, it kind of came down and it got support at that 50-day line. Then it came up and it tested that 50-day line. It got resistance there, came down, and now it's come up and tested the 50-day line again. So my guess is with this one, we're going to see it come right up to the 50-day line, and then it's going to reverse lower. So this one probably is a short. This one here is probably a short. Now let's look at Google. Of course, these are two of the biggest components in the QQQ. That's the ETF that covers the NASDAQ 100. So let's look at Google, GOOG. Now, there's two Googles. I want to show you. There's Google A and Google C. Okay. Google A, Google C. They're both essentially the same, but I'm going to look at Google C, and the reason is because that is those are the shares that are most the those are the common shares. I don't think the other ones are preferred. There we go. Okay, so there's two classes of stock with Google. You probably want to be looking at the of the GL, not the GOOG. Okay, because they're two classes of stock. All right, so here's what's happened. Again, still in this downward trend, as you can see, coming up and weakening, still weakening, even at this price. It's up a little bit after hours, but it does look like it's getting support. I mean, not getting support, but it's getting resistance right at the 21-day line. This is why I'm always talking about this 21-day line. So the question is, would you short it? Well, that's a tough one, but I think that it's possible because the 21-day line, you notice how close to that 21-day line it is? 89.68 is where it's at. So my guess is it's going to come up a little bit, and obviously it's up a little bit after hours, but it's going to come right up to that 21-day line, and then it's going to move lower. So let's compare that with let's see if we can compare that Google and Amazon. And I'm only going to look at the last 3 months here, and then I'm going to put this up on the screen so you can see it. I'm just behind the scenes here. I'm trying to give you the chart. There we go. All right, so this is going to give us, now if you're watching on TikTok, you can see it already, and now I should be able to get it right back to you here. Oh, there we go. All right, so this is the comparison between Google and Amazon. So hopefully, there. Sometimes it's a little tender, and I think it's the batteries. There we go. Okay, so here we go, Hans. Thank you for that. This is the relative performance of both over the last 30 days, over the last 90 days of Google and Amazon. As you can see, Google has fallen less than Amazon, but they're still, both of them are still sort of in a bad situation. What I did is I just adjusted the scale there a little bit. But even if you had invested $1 just 3 months ago in Amazon, you'd be down almost almost 30 cents. The same 20 cents with Google. As you can see, they're still in a downward trend. So even though we have this upward movement here, the overall trend is still down. So I would not buy this long. I would wait until you hit some resistance and then possibly short it. So that's kind of my take on both Amazon and both Amazon and Google. They're both going to go further down, unfortunately. All right, which site is better than TradingView or Webull? You know what? I don't use either of them. I think TradingView is better. That's a good. It's a good. That's a very good platform. TradingView. Now it doesn't have quite as many details as, oops, as the program, the system that I use, which is called MarketSmith. The problem with MarketSmith, of course, it's kind of expensive, and that's one of the issues with. There we go. Come on. It's not cooperating. There we go. So let's go back to the right screen. Yeah, there we go. All right. But I thank you very much. What indicators are you using? Okay, I primarily use 3 indicators, and this will probably have to be the last question. I use the 10-day moving average, and that's just a regular moving average. I use the 21-day exponential moving average. That's the only exponential one, and that's a logarithmic one. That's where I like to buy or sell. I like to buy or sell close to that line. Why? Because that's going to tell us pretty much that's going to tell us how far extended or non-extended we did. We don't want to buy extended. So anything more than about 5% away from the 21-day exponential moving average is not a good place to buy because that means it's extended. And the other ones I use are the 200-day moving average and then the 50-day moving average. That's on the daily chart. Now, on the I know this is complicated. On the weekly chart, I use two indexes, the 10-day the 10-week moving average and the 40-week moving average. So, but the most important ones are the three most important ones I believe, well, the three most important ones I believe are the 21-day exponential, the 200-day moving average, and the 50-day moving average. So that's kind of how I view it. All right. Well, thank you very much. Hopefully tomorrow I will have a better setup when it comes to when it comes to my machine. Hopefully that will work better than it has today. I mean, because today it's just giving me fits and starts, and I apologize for that. All right. So please, it really helps my channel if you can go ahead and like it. That really helps us. So smash that like button. Smash, 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 smash that like button. And also, if you aren't already a member of Dallas Trading Floor, just jump. You can go to www Dallas Trading Floor, and of course, this is YouTube, Dallas Trading Floor. So please like and subscribe to the channel. I really appreciate it. We have, we have quite a few likes on YouTube, and hopefully, get some more. Also, if you want to find out more about some of the other things that we have at Dallas Trading Floor, just go to www Dallas Trading Floor, and I will see you back here tomorrow. Let's see. We have one last one. Uh, is it free to be a member? Well, we have two levels. One of the levels is yes for the action trade alerts. It's absolutely free, and yeah. So just go to that. We do have a Discord room that is a paid service, and that's where I actually try to analyze as many of the people's trades as possible. That is a paid service. That is our trading community, and that's $30 a month. But that's a good one too. Also. But it's free to be a member of the Axe Trailers. So just go to www Dallas Trading Floor. Just fill in your information. Click on that. You can unsubscribe anytime, but that way we can get some lists out to you, blasts, and sort of ideas on trading. So again, thank you very much for asking the question. And I will be back here tomorrow. I try to broadcast at 5 every day if my equipment is working. And my equipment is working. So thank you for finding me on YouTube. I really appreciate it. Please tell your friends about it. I would really appreciate it because the more likes that I get, the more it goes out to everybody. So really, really appreciate that. Thank you very, very much. Thank you very, very much. And what is my opinion of crypto? Well, I think crypto is going to be coming into a winter here. I think right now, if you have crypto, good idea possibly to consider maybe taking some of that crypto money and transferring it into gold because I think the crypto is going lower. Right now, I think the support for Bitcoin is about 16,000. I think that it's going to probably, before it turns, I think it's probably going to go down to about 7. So I would not be wanting to hold crypto. I don't hold any crypto right now, but I am loading up on physical gold. So that's not my whole portfolio, but part of it just because of the digital dollar and some of the other initiatives that are happening right now. So you might want to look at that. I think the crypto trading now that FTX is gone, it's just going to be tough. And I think it's just going to be a tough time. I think a lot of fraud is you open yourself up for a lot of fraud there. I'd be super careful because that's what happened with Sam Bankman-Fried. Everybody sent their money, and I'm talking big companies too, and the money just disappeared. So I'd be really careful on crypto right now. I'm not against crypto, but the way that crypto is being traded right now, I think you got to wait until the dust settles. I want to see before I'm starting to get interested more in crypto. I want to see Bitcoin at 7,000 or lower, and then I'm possibly interested because I do think that long term it has a future. But it's overvalued right now for the market, and I do think it's coming down. So I'd be very, very careful with crypto. All right. Well, thank you so much, everybody. Thanks for watching. I'll be back at 5 tomorrow.